The U.S. administration lifted its suspension of military aid and intelligence sharing for Ukraine, and Kiev signaled that it was open to a 30-day ceasefire in the war with Russia, pending Moscow's agreement following talks in Saudi Arabia. Geopolitics has become a major driver under the unusual cloud of uncertainty. Meanwhile, Trump has said markets are going to go up and they're going to go down. But you know what? We have to rebuild our country. Hello, welcome to Global Business Insights, where we look deeper at the main business stories. Our deep dive is in America, where the president yesterday met with 100 businessmen at a round table and all the related issues as sentiment in the United States remains low. First, the business stories. The latest U.S. Small Business Optimism Index released yesterday posted a decline for the second month in a row, falling by 2.1 points to 100.7. Business uncertainty soared to the second highest level in the 50-year history of the NFIB survey. The New York Federal Reserve Bank's Federal Survey of Consumer Expectations also found that 27.4% of households expect their financial situation will be worse a year from now, the highest level since November 2023. Bank of America's aggregated card data also found that credit and debit card spending per household declined 2.3% year-on-year in February compared to 1.9% rise in January. Restaurant spending also saw a decline last month. That is a category typically that holds up pretty well amid previous slowdowns. It's still all about America and tariffs and the uncertainty from Trump policies and lack of clarity on what has been described as an adjustment by the Treasury Secretary. President Donald Trump yesterday addressed a major meeting of top CEOs, many of whom have seen the value of their companies slashed as Trump's tariff-heavy economic policy has raised uncertainty and fueled a market sell-off. Trump spoke to CEOs at a regular meeting of the Business Roundtable, which includes the heads of Apple, JP Morgan Chase, and Walmart. The event followed a private Trump meeting with technology company executives at the White House. Analysts have been giving tips for businesses in America. Most important, they say, stay below the radar and then stay true to your mission and values, and of course be flexible to change your tactics as required by the context. Elon Musk may have hundreds of billions of dollars to lose, but most other businesses will not. A combination of market challenges and a lot of public anger has hurt the Tesla brand of late. Yesterday's Tesla stock experienced its largest sell-off in the last 4.5 years as its shares shed 15.5%. Trump has come out to support Elon Musk, including buying a Tesla car. Are we in a period of transition or jolted by policy missteps as decades of free trade agreements are being renegotiated and the tariffs are being hiked, paused, rehiked, cancelled, and negotiations all going on at the same time, creating a flux and volatility which traders are not too pleased with? They've priced in pretty much a worst case and making adjustments in this atmosphere of uncertainty. Last month, we had 25% tariff on all imports of steel and aluminium into the US from all countries. Later, those tariffs were raised to 50% for Canadian imports of the metals after Ontario placed a tax on US-bound electricity. Now it's been reported that after Ontario agreed to suspend that surcharge, both have agreed to talk. With Canada and Mexico, the US imposed 25% across-the-board tariffs on March 4, only later to pause on goods and services compliant with the United States-Mexico-Canada Agreement, USMCA, until April 2nd. Trump also threatened tariffs on the EU, while for China, the tariffs and retaliations also came. Now we have 20% tariffs on Chinese imports. China has slapped back so far 15% tariffs on US farm goods such as chicken and pork. And then reciprocal tariffs are still on the cards. The effect of all this is a volatility and the end of any premium from the euphoria of the election that we saw in November. The mood is full of anxiety as analysts consider the chances of a stagflation and reduced economic growth forecasts are coming down, and we are seeing major market moves taking the Nasdaq, S&P 500 and Dow Jones all on the back foot, and at best a cautious wait and see mode. Yesterday we got some labor market data. The US job openings and labor turnover survey, that's jolts from Bureau of Labor Statistics, showed job openings totaled 7.74 million at the end of January, above analysts' expectations of 7.63 million, and also higher than the revised 7.508 million positions reported in December. Not the type of numbers predictive of recession, but then many of these numbers are yet to reflect the current mood. While today's JOLTS report offers further evidence that the jobs market started the year in decent shape, clearly there are headwinds which may have emerged more recently. Later in the week, we will get two key inflation data providing more clues on price movements and how the Federal Reserve Rate Setting Committee might act. More specifically, February's Consumer Price Index is expected to show price increases moderated during the second month of the year. Headline annual inflation is expected to come in at 2.9% in February, just slightly under January's 3% annual gain. Later, in a part of the Business Roundtable that was closed to reporters, Trump vowed to speed up approvals in environmental agencies and cut tax rates to 15% for companies making products in the US. But what else is making headlines? China's leaders have spent the past week unveiling their plan to transform the country into a technological powerhouse and ramping up spending to hit an ambitious growth target. Beijing is seeking to sort out many domestic issues, including fallout of a real estate crisis, high local government debt, and weak consumer demand, while of course facing fresh pressures from the current US administration, threatening expanded controls on American investment in China. The euro scaled a new 4-month peak against the dollar yesterday on hopes a German defense spending deal could be struck by the end of the week, while the dollar index slipped to its lowest since October due to US recession fears. Sir Keir Starmer, that's the UK Prime Minister, has said he will not impose immediate counter tariffs against Washington if Donald Trump hits Britain this week with his 25% global levy on steel and aluminium imports to the US. Downing Street said the UK Premier would take a cool-headed approach as he tries to keep Britain out of any wider transatlantic trade war. Almost half the workforce of the US Education Department have been laid off in a step towards the President's pledge to move more activity in education to the states. The Education Department announced it would lay off more than 1,300 workers. Canada's Energy Minister Jonathan Wilkinson said late Tuesday that it may impose non-tariff measures, including restrictions on oil exports to the United States, if trade tensions with Washington escalate further. And according to Mona Monzer, that's the communications coordinator at Transparency International, climate change impacts are felt most intensely by women and systematically marginalized communities of the global majority, especially those on the front lines of the climate crisis. To change this, she says we need a gender-responsive climate financing framework that prioritizes the unique needs and strengths of these communities. Gender-responsive climate financing also aims to ensure that funds for climate adaptation and mitigation address the unique challenges faced by women, girls, and marginalized communities. In Nigeria, the CBN is bucking the past trend and said to be selecting directors through a transparent process facilitated by consultants, showing good example. The CBN reportedly engaged the global consultancy firm PricewaterhouseCoopers to conduct the selection process for the directors from among top officials of the bank who applied following an internal advertisement to ensure only the most competent are elevated. The central bank recently recruited 16 new directors through a highly competitive process and not through arbitrary promotions. These appointments took effect from March 3, and it affects critical departments of the apex bank such as monetary policy, trade and exchange, banking supervision, payment systems and consumer protection, among others. US stocks made several attempts at a rally yesterday, with the S&P 500 and the Nasdaq Composite both closing lower on the day. S&P 500 entered correction territory for a few minutes following the Nasdaq. After an exhaustive effort to explore all available means to secure a viable financial and operational future, struggling electric vehicle battery manufacturer Northvolt said it has filed for bankruptcy in Sweden. US increased tariffs on steel and aluminium imports take effect today as prior exemptions, duty-free quotas and product exclusions expired. While the UK have said they will not retaliate, at least not yet, the European Union is taking a different position. The EU is slamming counter tariffs on 26 billion euros, that's $28.33 billion worth of US goods starting in April. This, they say, they must do to protect their businesses and consumers. Hong Kong's Cathay Pacific Airways posted a marginal 1% rise in its full-year profit, driven by higher passenger volumes and lower fuel prices. Net profits came in at 9.89 billion Hong Kong dollars, that's 1.27 billion US dollars for the full year ended December 31, 2024, compared with 9.79 billion Hong Kong dollars reported a year earlier. Zara owner Inditex posted a year-on-year rise in fourth quarter sales that met expectations. The Spanish retailer reported revenues of 11.21 billion euros, that's $12.2 billion, in the 3-month period, matching the 11.2 billion euros forecast and up from the 10.34 billion euros in the same period of last year. The company, however, pointed to a slight slowdown in first quarter sales this year, that's 2025. Asia Pacific markets mostly rose, breaking ranks with Wall Street, which was still feeling the uncertainty over Trump's tariff plans and fears of recession. Like we said, Trump no longer plans to raise tariffs on Canadian steel and aluminium imports to 50%, but the uncertainty still lingers. Well, that's all we can take on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosani. Bye-bye.